You think you blow up accounts because you don't have the right strategy, or because you haven't learned enough indicators, or because you're not smart enough, not disciplined enough. That's what you tell yourself every time it happens. And that's exactly why it keeps happening. Because the real reason you blow up accounts has nothing to do with your strategy, your indicators, or your intelligence. It has everything to do with something you've never even considered. And I'm going to show you exactly what it is. Let's start with what actually happens when an account blows up. You don't wake up one day and suddenly your account is zero. It doesn't work like that. It's a process, a sequence of decisions that builds on itself until the inevitable happens. And here's the thing, every single one of those decisions felt right in the moment. That's what makes it so dangerous. You're not making obviously stupid choices. You're making choices that feel justified, that feel logical, that feel like the right response to what's happening. But they're killing you. Think about the last time you blew up an account or came close. I want you to really think about it. What was the sequence? I'll tell you what it probably looked like because I've seen it 1,000 times. You took a loss. Not a big one, just a normal loss. But instead of shrugging it off, something shifted inside you. You felt like you needed to make it back. Not wanted to, needed to. So, you started looking for the next trade. And here's where it gets interesting. You found one. Of course you did. Because when you need to find a trade, you'll always find one. Your brain will make sure of it. That trade probably didn't meet all your criteria. Maybe the setup wasn't quite perfect. Maybe the risk-reward wasn't as good as you normally demand. Maybe the market context was a little off, but you took it anyway because you needed to make back that loss. And maybe it worked. Maybe you made back the money and felt relief wash over you. That's the worst possible outcome, by the way. Because now you've learned something dangerous. You've learned that breaking your rules works. You've learned that forcing trades works. You've learned that you can trade your way out of a hole. Or maybe it didn't work. Maybe you lost again. Now you're down 2 trades. The hole is deeper. And that feeling of needing to make it back just got stronger. So you find another trade, standards drop a little more. Risk goes up a little more. You tell yourself this is the one that will turn it around. But even as you're clicking the button, there's a voice in the back of your head saying this isn't right. You ignore it, because you need to make it back. This is the cycle. This is what actually blows up accounts. Not bad strategy. Not lack of knowledge. This cycle right here. And the crazy part is you think the problem is that you keep losing trades. That's not the problem. Losing trades are normal. Every profitable trader loses trades. The problem is how you respond to them. The problem is that you think losses are something to be fixed immediately instead of something to be accepted as part of the cost of doing business. Let me tell you what's really happening in your brain during this cycle, because once you understand this, everything changes. When you take a loss, your brain interprets it as a threat. Not a physical threat, but a threat to your ego, your self-image, your story about who you are. You're a trader. Traders make money, but you just lost money. That creates cognitive dissonance. Your brain hates cognitive dissonance. It will do anything to resolve it, and the fastest way to resolve it is to make the money back. Then the loss doesn't count. Then you're still a winning trader. Then the story holds together. This is completely subconscious. You're not aware it's happening. You just feel an urgency to get back in. You feel like sitting on the sidelines is wasting time. You feel like the next trade is going to be the good one. But those feelings aren't coming from analysis of the market. They're coming from your brain trying to protect your ego. And your ego doesn't care about your account balance. It cares about being right. It cares about maintaining the story. It will burn your account to the ground to avoid admitting that you're just wrong sometimes. Here's what makes this even worse. The bigger your loss, the more your brain needs to fix it. But the bigger your loss, the worse your decision-making becomes. It's like trying to perform surgery while your hands are shaking. You're operating at your worst exactly when you need to be at your best. Professional traders understand something that losing traders don't. Losses aren't the problem. Losses are just data. They're information. They're the cost of finding the trades that work. But when you treat every loss like a crisis that needs to be immediately fixed, you turn normal losses into account-destroying spirals. Let me show you what professional risk management actually looks like, because I guarantee it's different from what you're doing. Professionals decide how much they're willing to lose before they even look at the market. Not per trade, per period. They might say, I'm willing to lose 3% of my account this week. That's my budget. Once I hit that, I'm done for the week no matter what. No exceptions. No special circumstances. Done. This does something crucial. It removes the ego from the equation. The loss isn't personal anymore. It's just a budget that got used up. Like running out of groceries before the next shopping trip. You don't have an emotional crisis about it. You just wait until you can buy more groceries. But most traders don't think like this. Most traders think in terms of individual trades. They'll risk 1% per trade, which sounds responsible. But they don't have a stop loss for their total equity. So they can take 10 losing trades in a row and be down 10% before they even think about stopping. And by that point, the psychological damage is done. They're in full recovery mode. The ego is screaming. The rational brain has left the building. This is when accounts die. You want to know the secret to never blowing up an account again? It's not a better strategy. It's not more discipline. It's designing a system that removes your ego from the equation entirely. You need rules that stop you from trading before the ego takes over. Because once the ego is in control, you've already lost. You just don't know it yet. The math will catch up eventually. Here's a rule that will save your account. If you lose your daily or weekly risk budget, you're done. Computer off. Walk away. Go do literally anything else. Don't analyze what went wrong. Don't look for the next trade. Don't tell yourself you'll just watch the market. Done. Finished. Because every minute you stay engaged after hitting your loss limit, you're feeding the cycle. You're giving your ego more opportunities to convince you that the rules don't apply right now. That this situation is different. That you can see a setup that's too good to pass up. But here's what nobody tells you. The hardest part isn't following this rule when you're down. The hardest part is following it when you're up. Because when you're winning, your brain tells you you're in the zone. You're seeing the market clearly. Why would you stop now? This is when you should press your advantage. And that's exactly when you give back all your gains and then some. Because you're not in the zone. You're high on dopamine. You're making decisions based on how you feel, not what you see. And feelings lie. The traders who last, the ones who compound their accounts year after year, they have something in common. They're boring. They have rules, and they follow them even when it feels wrong. Especially when it feels wrong. Because they've learned that feelings are the worst possible guide in trading. When you feel like you should trade more, you should trade less. When you feel like you need to make money back, you should stop trading entirely. When you feel like you're invincible, you should cut your position size in half. Your feelings are designed to protect your ego, not your account. So, here's what you need to do. Before you take another trade, write down your stop-loss rules. Not for your trades, for your account. How much are you willing to lose per day? Per week? Per month? Write it down. Make it non-negotiable. And the first time you hit that limit, stop. Don't analyze. Don't plan. Just stop. Walk away for the rest of the period. Because that's the moment. That's when accounts live or die. Not when you're taking losses. When you're deciding whether to respect your limits or break them just this once. The real reason you blow up accounts isn't because you're a bad trader. It's because you're a human being with an ego that refuses to accept losses as normal. And until you build a system that protects you from your own ego, you're going to keep blowing up accounts no matter how good your strategy is. The market doesn't care about your feelings. It doesn't care about your story. It doesn't care if you need to make money back. It just is. And the moment you accept that, the moment you stop fighting losses and start managing them, everything changes. You stop blowing up accounts. You start building them. Not because you got smarter, because you finally stopped letting your ego trade your account.